So the nice thing about private lending, like I mentioned, is it's very flexible. So you can create a business model depending on what you want. So for example, some private lenders will have a debt fund. They'll start a 506B, 506C, similar syndication, only it's going to be going into secured notes. And that will be their source of capital. Big, really, really big lenders, hard money lenders, for example, they could be backed by hedge funds in New York. They could be backed, by their own debt fund, Reg A, something like that. So, or warehouse line of credit from a bank. The smaller lenders like myself, we tend to either be self-funded, so it's called balance sheet lending. So it's capital we have injected into the business that we are then lending out. We can also do brokering, which is another model a lot of smaller lenders use. So people within their network in some capacity, whether that is friends, family, associates, other real estate investors, they just need capital placed for a period of time. Maybe it's a fix and flipper that just needs a year off from fixing and flipping for health reasons, right? Like I have $100,000 that I was going to pour into my next project, but now I need to take a moment. I need to take a year off and help, mom and dad into a nursing home, for example. So we can help place capital that way. So that allows them to get income, and then we are also matching them with a borrower. So the borrower's getting a project done. The individual is getting their monthly interest-only payments, their cash flow, their capital is getting put to work. And then there's obviously, like you mentioned, there's business lines of credit that could potentially be pulled down to be used. You just got to be careful with that, with the timing, because some business lines of credit might have, a very short deadline. It might be you could only have this capital for 6 months. You can only have this capital for 12 months. And then whatever the interest rate is, obviously, you want to make sure you're charging above whatever that interest rate is. Otherwise, your business is negative every month. But yeah, there's a wide variety of sources. So it could be self-funded. You could do brokering. You could do business lines of credit, debt fund, warehouse line of credit if you get big enough. There's even white label funding. So once you have enough experience and enough what they call loan tape, you could go to some of these bigger companies and say, hey, I would like to be able to close loans in my name, but they will fund it, which is white label funding. So there's so many different ways to build the business. It's just a matter of what are your priorities and, what do you want to do and what's the timeline you want to do that in.